Morning everybody, this is Ospreyeye from mychartcoach.com and we are looking at ticker symbol MCIG. We'll be looking at three charts. This first chart is a daily chart. Each candle represents 1 day of trading. As you can see here, MCIG was trading in this downtrend here, riding the middle Bollinger Band resistance level. As you can see, middle Bollinger Band was this dotted purple line. And as you can see, the candles were riding EMA's 4 and 8 resistance lower while traveling what we call in the lower bearish Bollinger Band channel between, this is the lower Bollinger Band, the solid purple line, and the dotted purple line is the middle Bollinger Band. So the candles are in a downtrend riding EMA's 4 and 8 support lower. And then yesterday there was this break above both EMA's 4 and 8 and the middle Bollinger Band. As you can see, this candle here, the prices actually ran way up to 3.5 cents and then pulled back, forming this really long, nasty upper wick. This wick shows profit taking off high of day levels. As you can see, there's this giant volume spike. So the day yesterday started off really promising. The share price ran way up, and then sellers came in. Not sure if it's dilution, whatever it was, but there was big profit taking off this high of day level. Now you've got the following day candle gapped up with this big open way up here, and then now the trading is pulled all the way back to yesterday's close. This is forming an ugly black candle. So really you have these two kind of ugly developments in a row. You got this nasty long upper wick showing profit taking, and then now starting the day off right where it left off yesterday. Started off promising, big gap open, and then boom, you've got selling off right at the open. So the key going forward is to turn the middle Bollinger Band into support. So candles forming above the middle Bollinger Band will equal upside potential and possible new uptrend. If the middle Bollinger Band, currently at 0.0225, turns into resistance, that will equal downside risk, and that will continue the downtrend. So what we're looking for now is the possible start of a new uptrend. Okay, now up here on Fasto had a bullish crossover yesterday. The green line crossed the red line to the upside. Okay, it is below 50. Bulls want to see the RSI or Fasto, break 50 and get into the bull zone. As you can see over here, when there was a spike above the middle Bollinger Band, Fasto broke above 50. That was the only time in the last 3 months that happened. So you will know strength is building and MCIG is heating up when Fasto is above 50. And then up here, this is promising. You've got RSI at its highest level since the big move back here in August when it broke above 50. So now you have RSI above 50. So going forward, bulls want to see RSI hold 50 and trade between 50 and 70. That would be very bullish. So strength is building. And then if you look down here at MACD, you'll see that on the 19th there was a bullish crossover, and then now you have the green line, which is the MACD line, is separating from the signal line. So strength is building. It's just you got to see, we have to see whether or not is the selling going to continue or are buyers going to step up. Okay, let's look at the next chart. The next chart is a daily chart, and this shows the 50, the 100, and 200-day moving averages. And this is what we like to see when we're charting stocks. We like to see stocks that were trading below the 50-day moving average. As you can see up here on that run in August, the 50-day moving average was hit, and then it had been resistance for the last couple months until yesterday when that level was broken intraday. So that was the first time it was broken intraday since it was broken intraday back here in August on the big run. And then today it opened, MCIG opened above the 50-day moving average, which is currently at 0.0276, and it is now trading below that level. So going forward, candles forming above the 50-day moving average at 0.276 equals more upside potential, and that would put this 100-day moving average currently at 0.378 on deck. So what you have here is you have this this line in the sand. This 50-day moving average is the line in the sand. A close above equals more upside potential and puts the 100-day moving average on deck. Fail to close above the 50-day moving average and turn that level into support, and this nasty downtrend continues. So let's look at the next chart. The next chart is a 15-minute chart. On this chart, each candle represents 15 minutes of trading. This is a 3-day chart. So this shows yesterday's bullish move. You can see, this is very important when you're charting. Look at the action on November 4th. Notice how the share price consolidated, was trading really, really tight. And then look at the Bollinger Bands. Look how tight they are here. The upper and Bollinger Bands are so tight that it was signaling that there was a move coming. There was a move imminent, and then boom, it broke out to the upside on the 5th. And then the candles were riding in the bullish upper Bollinger Band channel, riding this upper Bollinger Band resistance level, which is the solid purple line. And see how this candle formed well above the upper Bollinger Band? Well, the candles pulled back in, they always do. And they were riding EMA's 4 and 8 support until support broke right here on this candle. And you can see the purple line cross the green line to the downside. That was the bearish crossover and the signal that MCIG is breaking down. And when candles started forming below this middle Bollinger Band, that officially started a new downtrend on the 15-minute chart. So going forward, bulls want to see candles forming above this purple dotted line, which is currently at 0.028. So candles forming above the middle Bollinger Band will equal upside potential and a continuation of this uptrend. If candles fail to break the middle Bollinger Band and it turns into resistance, it will equal downside risk, and it would continue the downtrend that started off this big candle. So yeah, if you look up here, Fasto is at extreme oversold levels at 0.00. So this is extreme oversold, tons of juice until 80 oversold. RSI is now at its lowest level since on the 4th. So RSI is below 50. Bulls want to see RSI back above 50. There was a big volume spike here. As you can see, that the gap, this is a black candle, which is ugly. We call it black because it's solid. A black candle forms when the open is up here and then the share price trades below the open before the candle forms. That forms a solid candle, which is not what bulls want to see. This shows profit taking. There's a big spike. People were selling the spike. So what bulls want to see is they want to see a load. As you can see, there was a bearish crossover here on MACD. So that's looking, that's showing the bears have taken over. What bulls want to see is they want to see the histogram peak down here to the downside and start retracting, and they want to see MACD line, the green line, level, and then hook back up and cross the red line to the upside. That's when you'll know that the next uptrend is starting. Okay, so this is ticker symbol MCIG. Thank you for viewing this chart. Please check out our website. We have a chat where we give information all day long. We post plays, technical information, and then we post videos and charts on the website. For the best information, you got to be checking out the website. Thanks for viewing this video. Much appreciated.